Bitcoin. It's the buzzword on everyone's lips, the topic of countless conversations, the cryptocurrency taking the world by storm, revolutionizing the way we think about money. From Wall Street investors to your tech-savvy nephew and even your neighbor down the street, everyone's trying to get a piece of the action, hoping to strike it rich. But what exactly is Bitcoin, and why is it causing such a stir? Imagine a digital currency, free from government control, accessible to anyone with an internet connection and not tied to any physical form. That's Bitcoin in a nutshell, a decentralized form of money. Its decentralized nature and potential for high returns have made it incredibly appealing to a wide range of people, but like a shiny new toy, we need to be careful not to get carried away by the excitement. Bitcoin's value is famously volatile, swinging wildly from one day to the next. One day it's soaring to new heights, making headlines and creating millionaires overnight. The next it's plummeting faster than you can say cryptocurrency, wiping out fortunes just as quickly. This volatility is part of its allure, offering the potential for massive gains and life-changing wealth. But it also comes with significant risks that can't be ignored. Imagine investing your life savings in Bitcoin, only to see its value plummet overnight, leaving you with a fraction of what you started with. It's a gamble, and like any gamble, it's important to understand the stakes before you go all in. Educate yourself, weigh the risks, and proceed with caution. Now let's talk about the big one. Could Bitcoin lead to economic collapse? This question has been on the minds of many financial experts and enthusiasts alike. It's a scary thought, but one that's worth considering. The rise of Bitcoin has been meteoric, and its impact on the global economy is still unfolding. Imagine a world where traditional currencies crumble, replaced by a decentralized digital system. This shift could fundamentally alter how we conduct transactions and store value. It's a future some Bitcoin enthusiasts eagerly anticipate, but others view it with trepidation. The debate is intense, with strong arguments on both sides. Could Bitcoin's rise to prominence destabilize global markets? The volatility of Bitcoin prices adds to the uncertainty, making it a double-edged sword. Critics argue that Bitcoin's decentralized nature makes it difficult to regulate, potentially creating a breeding ground for illegal activities. This lack of oversight is a major concern for many. They also worry about its impact on traditional financial institutions. Banks and other financial entities could face unprecedented challenges. If everyone starts using Bitcoin, what happens to banks, governments, and the systems we rely on for economic stability? The ripple effects could be enormous. It's a complex issue with no easy answers, and the potential consequences are far-reaching. As we move forward, the world will be watching closely to see how this digital revolution unfolds. Beyond the economic implications, Bitcoin also raises questions about our values and work ethic. What happens when people can potentially get rich quick through cryptocurrency speculation? Will it breed a generation averse to hard work and traditional employment? Imagine a world where everyone is glued to their screens, obsessed with tracking Bitcoin's every fluctuation. Will we see a decline in traditional employment as more people opt for the perceived easy money of cryptocurrency trading? It's a valid concern, and one that raises broader questions about the future of work in a digital age. Will Bitcoin fundamentally change our relationship with labor and success? Section 4, Productivity Puzzle. Bitcoin's impact on output. The potential impact of Bitcoin on productivity is another area of debate. Experts from various fields are constantly analyzing its potential benefits and drawbacks. Some argue that it could usher in a new era of innovation and efficiency. They believe that Bitcoin and its underlying technology can streamline processes and reduce costs. Imagine a world with faster, cheaper transactions, where businesses can operate seamlessly across borders. This could lead to a more interconnected and efficient global economy. Bitcoin's underlying technology, blockchain, has the potential to revolutionize various industries, from supply chain management to healthcare. It could enhance transparency, security, and efficiency in these sectors. However, others worry that Bitcoin's volatility and the allure of quick riches could distract from real-world productivity. The constant fluctuation in its value can create uncertainty and instability. If everyone is busy chasing cryptocurrency gains, will we see a decline in innovation and progress in other areas? This concern is particularly relevant in industries that require long-term investment and focus. It's a classic double-edged sword. and only time will tell how Bitcoin's impact on productivity will ultimately play out. The future remains uncertain, and the balance between innovation and distraction will be crucial. Section 5, a world gone crypto utopia or dystopia. So what does the future hold for Bitcoin and its impact on society? Will it lead to economic collapse, erode our work ethic, and cripple productivity? Or will it usher in a new era of financial freedom, innovation, and prosperity? The truth is, no one knows for sure. The future is unwritten, and Bitcoin's story is still being written. It's important to approach this new technology with a healthy dose of caution and critical thinking. Don't believe everything you hear, and don't let fear or greed cloud your judgment. Educate yourself about the potential risks and rewards, and make informed decisions about your own financial future. Section 6 disclaimer: don't panic, but now before you run out and sell all your possessions to buy Bitcoin, remember this. Everything we've discussed is purely speculative. These are potential scenarios, not guaranteed outcomes. The future is uncertain, and Bitcoin's journey is far from over. This isn't financial advice, just a friendly reminder to stay informed, be cautious, and maybe don't put all your eggs in one digital basket.